Hi, so Charlie giving you Monday's update, and I hope you're very well. Give me a slightly different update today. Excuse my voice, I've lost my voice a bit from the weekend. Kim and I were training traders all weekend, so the voice has got a bit croaky. But a slightly different update today because we've had a lot of questions come in about the DST. They're just general questions, and it's been great response that we've had from DST. But Sam keeps on saying to me, Charlie, when are you going to do a video? So I'm going to build it into this video update. So without further ado, and I will move on to the markets afterwards, but let's go through some general concepts of the DST, because some people have said, could Charlie put a video in and show us some trades that that DST has given him? And I'm thinking, well, if I do that, then I'm just basically going to be showing you the strategy, aren't I? So I can't exactly do that. But what I can do is say, well, there's been a couple of instances, and when I gave Sam all the information that she needed in order to put the web page up originally, I'd been in a trade on dollar CAD, which was I think it was about a 1 to 24 or whatever it was, risk to reward, 1 to 24. So for every £1 risk, I made £24. So, I mean, not a bad trade. I'm sure most of you would agree. And to get high risk reward trades, generally speaking, you're not trying to pick tops and bottoms exactly, but you need to be in, closer towards the high or the low. And so that's what DST does. It's not a bottom picker or top picker exactly. It waits for the top to round off a bit, or the bottom to round off a bit, and then if a setup comes along, then the DST will say, oh yeah, there's everything's lined up here, you can now trade effectively. So anyway, so I was in the dollar CAD. It was at that level there, somewhere about there, and I exited down here, and so that's what became a 1 to 24. Now, I will say to you that that's how I traded that. Now, if you'd have traded it and come out at 1 to 10, would you have been bothered? If you'd come and you'd have made 10, 1 to 10 risk reward on it, So that's the flexibility of this. It's not. I don't like completely mechanical trading systems. I like traders to be able to read the markets and to be able to say, right, okay, I have the option to do this, or the option to take my profits here, or the option to take my profits there. So that's what I prefer. So there are certain rules, and I show you all the rules for when profit taking opportunities. But obviously you get the option to say, oh, do you know what? I'm going to run some profits here. I'm going to see if I can get there's a bigger picture going on here. So anyway, that was one trade there. And if I actually click on, I think it's the Aussie dollar recently as well, then the Aussie dollar had a nice, that was a 1 to 8 risk reward trade, which was somewhere around here and came out up somewhere up there. And it was a 1 to 8 risk reward trade. Okay, now you're not necessarily always going to get 1 to 8s and 1s to 24s. It always seems to be coincidental that just as I'm launching a new product, that I get these amazing risk reward trades. But it doesn't matter if you're getting 1s to 2s, 1 to 3s. Then occasionally getting a 1 to 5 and that sort of stuff, then you've got a great product. And the nice thing with having good risk to reward trades is it makes you much more relaxed about having losing trades. We've had so many comments about that from our MBT traders over the last year or so, who said they found that they're a lot more relaxed about having losing trades, because they know that when they get a winning trade, they've got that ability to have some really good runs on it and good risk reward trades. So I think that's a really good valid point there that our customers have made. And DST is a singular setup. So I think someone said, oh, can I day trade with this? Well, you can day trade with it, but it's a singular setup. So as a day trader, you generally need to have a number of different setups. So this is just one setup, because it's not going to be there all day long, every day on a 5-minute chart. You will see them setting up on various time frames. So yes, you can day trade with it, but I would still, for a day trader, I would just say, look, you don't want to have all your eggs in one basket. You're going to need different strategies for different types of market conditions. So this is a singular strategy, which is very good, and it will give you some great risk reward trades. But is it enough for a day trader just to trade with that? Well, I still think you need something like a day trading package if you want to be completely day trading. So that's answering that. But for same for swing traders, this is a great way to swing trade. But they're not going to be setting up all of the time because it's a singular strategy. If you want more, then you go for something like MBT, but that's reflected in the price of the products, obviously. So with something like this, the nice thing is that for a lot of our traders, they can make back the cost of the course in the space of the first trade. Now, I also appreciate, I've got a guy here who's got an email saying, where's the question? Okay. Okay, it's not an actual exact amount. Sam's forwarded the question on to me saying someone's asked how much they would need to have in their account to comfortably trade this new divergent swing trading. How much would they need to have in their account? And I just put a response and said, well, look, even with as little as £1,000 in your account, even if a trade, if it's a swing trade, might require a 100-point stop, well, you can trade with 10p per pip, which even with a 100 pip stop, still means you only lose £10, which is therefore only 1% of your trading account. So you can trade with small accounts with this. So I think that answers that question. Now, if you're trading with a small account, then and you are trading at 10p's per point, then obviously the cost of regaining the course is going to take longer for if you're trading at that sort of level. However, the way that I always see this is that you earn the right to then trade at larger amounts. So if you've got a small account now, then you use this as your ability to make money, and in the future you know that you're going to be having a larger trading account. For you at the moment, it's all about gaining consistency, having some good quality trading strategies and setups, and then being able to grow that account over time, and then probably add to it as well. And then you are making some decent money. I do appreciate that some people are only trading at 10p's per points, 5p's per points, and so the actual amounts that they make is a bit irrelevant. But it's still in the long term, it is relevant because obviously it's all about gaining that consistency, no matter what level you're at, and then you can then add to your accounts and build and grow your accounts anyway. So, okay, so that's that one. Let me have a look at another question here. Oh, okay, yes, yeah. The other question I've got here is she said she's been asked for a video. These are the questions that she gets. I've been asked for examples of those trades, but you know, and how it works, and someone wants to find out more. Okay, so 3 different people have asked for videos. There you go. So all genuine questions that we get here. Just like to be fully disclosed. So there you go. So I have given a video there. So I think I've given enough as far as the actual trades are concerned, and it's a singular strategy. But I can't actually tell you what the actual amount strategy is for obvious reasons. That would be remiss, wouldn't it? Okay. Right, I've got some more questions here. Let's have a quick look. Okay, good question here. I've got, how much time do I need to commit to this per day to achieve consistent success? Oh God, how long's a piece of string? Again, you know, what are you doing with it? So, are you trying to day trade with it? If you're day trading, then you like I've already said, this is a singular strategy. It should be one strategy within a few strategies that you'd be using. So you know, because they're not going to be coming along every 5 minutes. So the answer to that is I don't know, because I don't know how many how you're saying how much time a day. But let's assume it's a swing trade. It's billed as a swing trading strategy, but it can be used for intraday. So that's the quality of it, that you can go down to the intraday time frames and find intraday setups using it. But let's assume that you're swing trading with this. How long would it take to achieve success with it? Well, again, how long's a piece of string? But what you need to do is watch the discs, then start looking back over history, start back testing. Or back testing is very difficult with this because it does you look at the higher time frames as well. It always makes it more difficult when backtesting because it's not a mechanical setup. But what you need to do is just go back and look at when the patterns happened in the past, so it helps with your confidence and gets your eye in for seeing the setup when it's coming. So again, it's down to an individual basis as to how long it might take you to achieve consistent success on that. I can't answer that question. What I can say is that quite quickly you can be making money with this. And like I've said, if you catch a trade where you get all of a sudden you get a 1 to 3, a 1 to 4 risk reward trade, right? Okay, you've just made a 1 to 4, let's say. You've now on your next trade or next trades, you've got to have 4 losers in a row just to get back and you'll only be going back to break even then. Do you see what I mean? And that's what's so good about high risk reward strategies, is that you can be wrong a lot of the time and still be making more money than you lose. So again, I think it's that naivety sometimes amongst especially amongst newer traders. It's not their fault. It's just that that's that natural human desire to want to be right. How often can I be right with this? Well, to me, it's not. That's the wrong question. It's how much money can I be making with this? So because you can afford to be wrong 50% of the time, 60% of the time, and if you're getting your 2 to 1s, 3 to 1s, and the occasional 5 to 1s, and maybe higher than that, because they're going to be there occasionally, your 10 to 1s and stuff, then you can afford to have lots of losing trades, and you're still making money. So I think that answers that question. I've got another question here. Which are the best trading times? Would it be the first 2 hours of London Open or New York? No. As far as intraday trading, again, that's an intraday trading question. Any time during the day is fine. So from sort of the London session onwards, and again, all the way through to later on in the afternoon, so sort of 4 or 5 o'clock. But again, it depends on the time frame you're looking at. So if you're looking at a 5-minute chart, that's exactly what I would say there. Yes, that's fine. If you're trading off a 4-hourly chart, then it doesn't really matter what time of the day it is. It really doesn't, because the 4-hour chart is a much larger pattern that's in play there, and so it really doesn't matter what time of the day you're looking at. It's the 4-hour charts will come into play. So, and it doesn't mean to say that you have to be staying up all night, because it's a 4-hour candles only change once every 4 hours. So when you go to bed, you're only going to be missing 2 candles or so, and then you'll be up and seeing what they've been doing. So no, I really like it. I'll give you a tip. I really like it on 4-hour and hourly charts. Don't get me wrong, you can go lower than that and go down to your 30-minute, 15-minute charts and stuff. But I tend to use this for hourly charts and above. So so it's sort of intraday. It is intraday trading on those. But the 4-hour charts then is sort of becoming sort of intraday and swing, and then obviously daily charts is obviously the full swing. But you can go lower time frames, but it's just that what I do, I have my stuff and everything I use off my little 5-minute charts, and so I don't need this for that. I use this for my bigger picture stuff. Okay, let's go look at another question. Oh, good question. Will I need any special indicators? No. Standard indicators that I'll be showing you. You even get my bands. And it doesn't matter who you're trading with, or which broker you use. Which trading platform you're using and charts you're using. They can all use this. It's not a problem. How long on average would I be expected to be in a trade? These were very open questions I got here. How long is a piece of string? Okay, if you're on a 5-minute chart, then it might only last 20 minutes, half an hour. If you're in a daily chart, on average, the trade could last, a couple of days or longer. Let's actually go for an example. Aussie dollar, when I was in over here, I was in the Aussie dollar for about 2 days or 3 days. The dollar CAD trade, let's go back to that one. Back here, I was in this trade on dollar CAD for about 3 or 4 days. Could I be in it for longer? Yeah, sometimes I'm going to see opportunities that I want to then just try and run it for a lot longer, and I could be in it for weeks. So again, how long's a piece of string really? But yeah, if you're in swing trades, then it could be a few days to a week to 2 weeks. It really depends on how long you want to try and run it for. And sometimes a market can be dithering around and just takes time to get down to your target. So it could take a week just to do that. Other times it comes straight down, like that dollar CAD one. Okay. What's the average stop loss used? Again, how long's a piece of string? What market are you trading? Some currency markets have higher volatility than others, or you might be wanting to trade it on the FTSE. It doesn't have to be a currency. You can trade it on other markets. So it depends on the volatility of the market, i.e. the average true range, the average range of the market, because that's what's going to affect where you're going to be placing your stops. But if it's a swing trade on a lot of the currencies, I'm talking about the major currencies, then you're going to be in the current market conditions. You're going to be looking up to around about 100 pips. Sometimes it'll be a lot less than that. You'll be able to find, oh look, I can get into this trade and only need a 40 pip stop, or even less than that. But it really depends on the setup, what time frame you're taking, etc., etc. Because what you can actually find is that sometimes you're taking a trade which is on a swing trade, which is setting up, but you actually find the entry drilling down to a much smaller time frame, which then allows you to get in with a tighter stop. Fantastic. Okay, that's enough. And I can't believe I'm 15 minutes into this, so I'm not going to do any analysis today. Like I said last week, I'm away on Friday, so no live trading this week. I don't know what time I leave actually for the airport, but so I guess it could be actually. I might be able to do a live trading video. It depends on what time. I don't know what time our flights are yet, so I'll have to find out with the Minister for Home Affairs. So there might be a video, there might not be. It all depends on what time I've got to leave the house. Have a great week though, and back in touch soon.